Yo, what's good, everybody? All right, so today I want to run through price action from July 7th, 2025, and I want to break this video into two sections. First, I want to look at the trade run through, just purely the technical analysis, how we can come into the day with expectations on what we expect to see on a no news Monday like this, how we can analyze market conditions, how I do my top down technical analysis. Then we'll run into some of the best trades of the day and how to actually execute on these trades, what entry models I would take, and stuff like that. Next, I want to talk about the psychology that was present within many traders today during the market. And I want to talk about how we can use that to find our weaknesses as traders and then just simply analyze those weaknesses and fix them so we can support our growth on our journey as traders. So without further ado, let's get into that video, baby. The first thing I love to do on Mondays is simply just hop in and define a weekly objective. Because once this weekly objective gets hit, price becomes much lower probability in my experience, right? So the easiest thing, and if you've seen this theory before, we zoom out to the higher time frame and we just look at how does the next candle close, right? So let's just choose any spot. We'll choose like right here. We'll see this candle breaks and closes below this candle wick and this candle wick. We're gonna expect the next candle to continue that pattern, right? So we eventually pull through. This one gives us a weak close. So the next candle we could expect to have indecision or to continue the pattern, right? Now we have indecision candle. Next we have an indecision candle. So the next candle I want to expect to continue this previous pattern. So what I'm expecting it to do is break either side of this candle, then move to the other side of the candle. So in this example, we come in with a bearish bias for this next weekly candle because we have imbalances here and because we're in a bearish trend right here. So as you see, it gets wicked and then we push lower. Now, a lot of times this might not also work because if you look at examples of this, we sweep this one and we don't actually take this high. However, we do the same. We sweep this, take this high. Then this one we sweep, we don't. So now we're expecting the market to take a side and then continue. However, it doesn't, right? It just takes this. And a lot of this was because during this period right here, a lot of this stuff was news driven. This was with tariffs and Trump and all that. But so the way I like to do this is literally just define what's the easiest weekly objective. So last week it could have been, or this week right here, we could have chosen this candle high, or we could have chosen this candle high. Or if we had great expectations of the week, we could have even chosen this or the all-time highs, which did end up actually just not barely getting hit, right? So the weekly objective for this week is simply just last week's high. So boom, we have a weekly objective. Let's mark that on both charts. Beautiful. Now we'll zoom in daily. We'll look at some analysis and what we expect for Monday right here. So we have on NQ, it actually helps me to do my analysis pretty separately because while both are correlated, they do also react off different things, right? So NQ has this daily order block we can expect to see price push into. It has this daily fair value gap that got opened up. So now we have a little bit of an area in which we could expect to see price push to and reject off of. On NQ or on ES, we have a daily fair value gap. That's pretty much all I'm eyeing here. Zooming lower, once again, 4-hour time frame. I mean, this is honestly holding up because this time frame is not the most clear for what we want to see, especially when we open the market and we're already this much lower. So what we can look at here is 4-hour time frame gives us a little bit more info. We can see some resting lows right here. This could potentially be a draw if price wants to push bearish, right? Next on ES, we're going to see a similar kind of thing, but once again, look at how uncorrelated this market is. This was from some really interesting PA, the other couple, I think last week, and we had this huge uncorrelation, which in my opinion, this is setting up sell side liquidity that's being generated right now for the market to eventually come take, right? So all I'm looking at here is I marked out this 4-hour imbalance on ES right here because to me this looked really good area to see price come to because number one, we have this imbalance sitting here. It's already been wicked twice, but we also have this nestled liquidity here and here, right? So that was the level in which I wanted to see price return to, and I was marking that out mostly with this. So I'll put this instead of this guy. All right, perfect. Let's zoom in even further. Hourly, we're coming in with a bigger time frame bullish bias because we have our weekly objective and we've been bullish for the past couple of weeks. All right, so one thing I think that it's important to pull from this is how we can examine exactly where our drawn liquidity is just based on where the high quality liquidity is, bro. Simply looking at right here, how can I figure out this one point as high quality liquidity? Well, let's look. We just hit all-time highs. We have a little bit of a bearish pullback. And if we want to continue long, we have to rebalance, right? So we're here. If we want to continue up to here, we have to rebalance, right? So look, 4-hour imbalance. Why is that little one so significant? We have a daily imbalance right here that we can then refine into the 4-hour imbalance, right? So if we have this level, look at this. This liquidity is not, there's no imbalanced price action here. What imbalanced price action is where price is moving and then makes an outsized move in one direction and then sustains it. There's not enough direction or not enough pullback to allow traders to get in their positions during this small area of the market. During this area of the market, there is not enough pullback. So this becomes an imbalance, right? So that's why we pull back into it and there's traders entering their positions, then we blast off. That's how imbalances work. Look, there's no imbalance right here. This is where the true imbalance lies. So perfect, we mark that out. Okay, let's get into the actual trade this morning. So we woke up, we had an upwards gap, right? We're waiting for this to be filled. In a way, it's sort of filled, but it still has more to go, right? And if you look, we've also been generating sell-side liquidity. Now, on NQ, there's actually a good long setup right here. There was a really nice 15-minute change in the state, I think around London session, and we pulled back to a 15-minute imbalance. We targeted for longs. I think these were two. This is actually not a bad London trade at all. You could have zoomed in right here with your 15-minute imbalance, touching the change in the state too. Yes, tap in. You could have looked for most likely a change of state right here. Hopped in. We were changing the state with most likely an SMT. I don't want to go scroll through and find it. But like we have, like this would have been a great trade. We had equal highs right here, and 2.72R London session, beautiful, right? But examine how this didn't come and hit the external drawn liquidity, right? Instead, what it did is it placed a SMT in the market. So boom, SMT. We know what these are. We now have a bearish SMT going into 9:30 into New York Open, right? So now, what are we looking for? We're looking for the higher time frame model. My favorite time frame alignment for models is the 15-minute. This 15-minute, 1-minute alignment is such a high probability. It's so clean. It happens pretty often, but it's not something you can rely on every single day. But when it does happen, the trade is always there and the trade is always great. So let's look. We have our 15 1-minute alignment. We have this hit, SMT at the highs, confirming our market maker model as potentially having smart money in the market at this moment. We have, I would look into, I mean, either if you want. We have a change in state right here. We have a pullback, 9:30 opens right here. Now this is where the market kind of gets a little interesting, and you have to have a better view of what the market's actually doing if you wanted to make some bread today, right? So all we're doing is we're using the higher time frames as a bit of a overlay guide for us, a skeleton for us to then zoom in and make some great trades off of, right? So if you watch, 9:30 opens and we immediately pull to these highs. We immediately push up, hit these highs and make a change of the state, boom. This could have been your first entry, right? If you took this entry, there's no problem. You got stopped out, there's no problem at all. I would have probably taken this something like this and then targeted for lower. There's no problem at all, but the only reason that this didn't work out is because look, we made a bear or bullish S&T right here. If you look, 9:30 came, and that was a huge manipulation in my opinion, right? So this is what gave a lot of people a long bias for the day, was this huge manipulation, correct? So how come we can take shorts and disregard this? Well, let's look. This manipulation came in, and this manipulation is not in favor of our draw, because we already know our draw is lower. This manipulation is not in favor of our draw. This small little SMT, it's only with a little wick, it's not in favor of the draw. So I'm going to sit there or understand it, but I'm not going to allow it to stop me from trading against it, especially when we're targeting low-hanging fruit for our main take profit. We're not going for home runs. We're targeting low-hanging fruit. So if we target the low-hanging fruit, this SMT really won't do a lot for us against our trade, right? So let's watch. We see a little bit of consolidation. Market eventually pulls back, making a 15-minute turtle soup. I think the 5-minute is probably the clearest to view this on. After the change in the state, displacement, pullback, tap, turtle soup on this one at about 9:45, right into the macro, by the way. Take notes of that, right into the macro. Right at the macro time, 9:50 opens. We hit this, so we make a little bit of push lower. We have a little bit of movement here. And then we choose to take the trade here on NQ. Your trade would have been marked, most likely, I probably would have taken it something like this and then targeted low-hanging fruit, either this or this one, and then eventually targeting lower to these lows, or even if you're a baller, this TP, which I believe just got hit. That would have been an insane trade. Yeah, insane trade. So let's quickly dive into why this worked out and why did we choose ES over NQ. Well, look, the 15-minute model is there. It's beautiful. It's bliss. Like, everything is perfect with this 15-minute model, and we have high quality drawn liquidity. It's very easy to understand why it worked out. I decided to take this trade on ES instead of NQ because if we look, this was a bit of a more complex, I mean, it's still simple, but it's more complex than normal. Change in the state was marked at this point right here because we marked change in the state with the highest or lowest, the series of up close or down close candles that's pretty much on the outside of the move, right? Just a very simple, easy way to explain it, right? The reason that this is change in the state and not this, which a lot of people took this as, is because, well, this move right here makes the highest high. The candle bodies only close at this point. And change in the state is to show the state of delivery of price action. So when we talk about delivery and we're talking about the change in the state of delivery, we're talking about how efficient price is and what direction price actually wants to move minus all of its noise, right? So just looking at this, we can examine the state of delivery. Now we know bodies tell the story, bodies show delivery, candles just show damage. They just show wicks, the wicks just show damage. They just show the noise in price action, right? So if we're trying to examine where price is going to move efficiently and where the actual narrative of price is, we look at the bodies, right? So that's why change in the state is not the highest wick, it's the highest body closure. So right here, highest body closure is this series of up close candles. Right here, you're changing the state. Typically, I like to place my entry right when I get that with displacement, and we also had an inverse value up here. Beautiful. Right when I get that, I like to place my entry right here and then wait for price to come tap me in. However, today was different because if we look at price, we can see we have a bigger order block right here. I like to zoom out just one time frame. Look, that little spot that we were just examining in price is really a 2-minute order block right here. That's what price finds support off, because when we're taking a trade with the change in the state, we're not taking a trade because the change in the state is not like a magical level that price wants to come back and tap to, at least in my opinion from what I've seen. The change in the state simply just acts as an order block, and it's a very quick level for price to come and find support off of with or without a fair value gap, right? So if there's a bigger order block that's sitting here overlapping this, it's most likely smart to just maybe take a look at it, right? So the bigger order block would be right here. This is most likely where I would have placed my entry, right at that bigger order block. And then we would have been breaded, like I said, targeting that low-hanging fruit first because we will never go broke taking profits at the right spots. And then finally letting price run. If you let it run to here, you're G, and this trade was beautiful. Glad you're finding fruit with what you do, bro. I'm glad for that. Last thing I want to look at is how on ES we came back and we hit we kind of came back and did a bit of a stop out at break even before continuing our full move. We didn't have this exactly on ES, but on NQ we did it. I think it's interesting to look at why this happens, right? The way I like to examine this is it's all through standard deviation levels, in my opinion, how I see most of this stuff play out. Now, the only issue with this is that your standard deviation level here is never really going to be the cleanest because look at this, is pretty much a bell-shaped V-curve recovery, right? Unless you're looking on here. But to me, I would probably mark standard deviation. Wouldn't have been the cleanest mark out, but right here. So The way I'm examining price is we know our standard deviation behavior is this. We want to see a bit of in our buy model, right? Or say our market maker model, right? We want to see price make the manipulation leg and then push. And how we mark standard deviation is like this. We do this to this. We want 2 to 2.5 to align. Then we want 4 to be our eventual draw, right? So we want to see price behavior do, tap us in, hit 2 to 2.5, and then from here, what we want to see is price pull back to equilibrium. And there's two schools of thought here, which I think is interesting. I'll tell you this first. First, we want to see price pull to equilibrium and then continue its move to 4. Now, there's two schools of thought here. There's the standard deviation that makes this move happen, that makes the 2 to 2.5 get hit, pull back to equilibrium, and push. And there's also another school of thought, which I think is interesting, how both of them are the same thing but completely different. It looks at market structure and intermediate term highs instead of this magical standard deviation level. That school of thought would rather believe, okay, when we hit a intermediate term high, which if you're aware what that is, I'm not going to explain it. When we hit, say, this intermediate term high, what we can now do is our short-term highs that were made along the way are now no longer protected. They're no longer protected. So say, let's get rid of this one. It was just some move like this, right? You guys kind of get what I'm trying to do here. But our short-term highs along the way are no longer protected. The only thing that's now protected is going to be this intermediate term high. So now what we can do is we can zoom out one time frame and we can look for a fair value gap or a PD area that price wants to pull back to, tap, and then continue the move. Both of these schools of thought create the same exact move and they explain the same exact move, but they just do it differently. I think it's interesting to value both and look at both and see what works in your trading, but you don't have to examine both constantly during the day. But so yeah, that is our standard deviation behavior. So let's look at how price moves off of this. We come back, we don't exactly hit 2 to 2.5 because in my opinion, this standard deviation was not really valid here, but the same behavior that we always see price do occurs. Usually when we get our equilibrium pullback, it's a break-even stop out before the model continues, right? And a lot of times I take trades off of this break-even stop out. So if you miss this initial move, what you can do here is simply look at this break-even stop out, break-even stop out. We see the move occur, we hit our first take profit, we pull all the way back to equilibrium. And honestly, if you were to take a trade here off of this pullback, I wouldn't have taken this because there's no real objective good displacement move and everything. But just quickly examining these, yeah, there's no really good SMT displacement move here, so I wouldn't have taken this. But if you took this here, this is still in line with price behavior, and if you targeted that lower here and didn't get delivered, there's no problem. I thought that was a great trade. Now, if you look though, price is doing, we pull back maybe an OTE, upper third, upper quadrant, whatever you want to call it, then eventually we make our continuation, right? So if there was SMT here, this wouldn't have been a bad trade at all. Let's look, we have equal highs on ES, NQ has higher highs, you have a super baby SMT. If you look, the exact same entry model happens. We have our candle close highest, up close candles, close the highest right here. This would be our chain of the state. Boom, at the high. If you want to just zoom out and do the order block method, which I think is always more concrete, this would have been bread makers, but this is once again a super early entry, right? Super early entry. I don't expect anyone to take that, but that's simply a behavior that I examine price do. Is it completes its first take profit, pulls back to break even, stops you out, and then continues. And a lot of you also examine this. This is why a great way to manage your trade is to keep your stop not at break even, but to just keep your stop exactly where it is. My favorite thing to do though is to put the stop at break even or in profit, and if there's a reason for me to re-enter, I'll re-enter, because the pullback is never guaranteed, but if it happens, there's also a chance that it runs right through your stop loss, right? So I just want to mitigate my loss, but be ready to enter again if I do get stopped to break even, if that makes sense. All right, we looked at the technical analysis of the day. This was honestly a beautiful trading day, and let's figure out what can we take from this to actually apply to our trading in the future. So I want to talk about now what we can do after a loss and how we can look at our performance and actually grow from that, right? So the way that I like to look at it is this. There's always a bit of anger from FOMO or from losing a trade, right? And a lot of people get past it, but a lot of people don't, right? So if you feel that FOMO or that anger, simply listen to yourself. And don't be mad, because if you FOMO, you miss the trade, you're presented with a choice. If you lose, you're also presented with a choice. The choice to me is so interesting because you can sit there and be mad or walk away or just not even be mad, maybe you're in control of your emotions, but you sit there and you just decided to say, the market it wasn't what it was today. It wasn't what it was today. Like my setup usually works, it doesn't work. That's fine. That's 100% fine. And that is way more emotionally powerful than a lot of other ways of walking away or just not even considering your loss, right? Just sitting there and saying, the market didn't work out for me. I'm a simple trader. I don't want to sit here and understand the market's like a quant trader. I'm just ready to hop off because the market didn't work out. I'm happy with the money I make. Beautiful. Go do that. Here's what I like to do. I like to sit there and I like to say, this is not my trade because this is not me. It's not like I'm mad at myself because I lost the trade. I only control the input. I never control the output. So the only thing I can sit there and do is look at the trade like it's simply variables. Like when you place your trade in your journal and you write how to SMT, change of the state, a sweep of liquidity, that's what this trade is. It's simply a bunch of variables. So examine, what did I have here? What did I not have? And why would this trade not work out? Why would it work out? The choice is presented to you to either choose that way or to be mad and walk away or not care about it. My favorite thing to look at is today. Say you took a loss, or say you woke up late. Say the reason you didn't make this trade is because you woke up late and the entry was already there before you woke up. You just told yourself exactly what you need to improve on. I love it, because if you walk back through this trade and you sit there and you actually try to learn from it, you can take away a couple things that were weaknesses in either your performance today or in who you are as a person or a trader, and then you can literally sit there, write them down, and you just created a personalized guide for yourself on how to grow as a trader and a person. It's that simple. You just literally sit there, you write, what did I do wrong? And you find it and you improve on it. Like we've been told this since middle school. It's so easy. Us as people, we know exactly what we have to do, but we don't do it. It's such an interesting topic to me. We all know exactly what to do, but we don't do it. And a lot of times we're reminded more, like I'm doing right now, to go do it than I am telling you some crazy new method that you're going to go do. Simply look at this market, figure out what you do wrong today. Okay, I woke up late. I used my trading signal group to find the bias instead of figuring out myself. Then you zoom out and you look at the bias and you're like, bro, I never would have taken that trade. Why did I take that trade? It didn't make any sense. If you do this, you will find all your weaknesses as a trader. Simply think of it as a video game. In GTA, your stamina is not enough, so you go run around more, you get more stamina. In GTA, you don't have enough money, you're going to go do heists or play games, bro. Literally think of this as a video game. Today, you woke up late, and the last week you've been struggling to wake up early. Simply just go to bed early tonight, read some tips on waking up early. Literally just grow as a person. It's a video game, bro. You're presented with a choice, take the right path, and actually learn to grow from it and grow as a person like a video game, bro. Just level up your attributes. Your strength isn't high enough to use this weapon. Level your strength up, bro. It's that easy. Simply think of it this way, and a lot of your trading will transform. That's all I want to go through today. Super glad we were able to look through the technical analysis and the psychology. And the psychology tip is the biggest thing that's allowed me to grow as a trader. And I know everyone says that and no one wants to hear that. You just want to find something on the charts that works. But the charts are going to work. The thing that I just told you is what allows you to find the things in the chart. Because if you're able to sit back and look and say, okay, I didn't have an SMT on this trade, or the SMT I had was against the draw. You just found the thing on the chart that made your trade not work. Now go back, look at some of your losers, and maybe you find 3 of your 10 losers had an SMT against the draw. None of your winners were taken with an SMT against the draw, something like that. That could be your flaw. Boom. Okay, now let's go back test it. Now let's go implement it into our live trading. You just increase your win rate by 5-10%. It's that simple. You need to look at your own journal, bro. It's the best book you could ever read on trading ever. Simply just grow it like a video game, make it work like a video game, and you are set. Thank you guys for listening today, and appreciate you boys.